Good evening, and everyone who's joined us from around the globe, especially to our clients over in Hong Kong. Thank you for joining us this evening for today's webinar. My name is James Stanton. I'm joined by my colleague Jim Ngai today. We'll be going through, as you can see from the first page, UK property investing, looking at the HMO and social housing style. So a bit of background on myself and the team. So I'm the managing partner here at Hoxton Property. I've been in this role for over 6 years now, and I've been in the finance sector for over 12 years. I'm joined by my Hong Kong colleague, Jimmy. So if you want to give a quick introduction, Jimmy, to yourself, that'd be great.
Thanks, James. I actually lived in UK for about 20 years in London. I did my first buy-to-let in Stepney Green 20 years ago, and I still have that. And I've done HMOs and conversions and things like that. And I've been doing this full-time for about 15 years. So that's me. Thanks, James.
Nice. No worries, Jimmy. Just want to point out, we are going to have questions at the end. There's a chat box on your right-hand side. We'll also be taking questions in Cantonese and English as well. So whoever you feel more comfortable with, we'll be able to do that. And that will be at the end of the presentation, and I will open up the chat box for everyone to write into. And if you could be so kind, if you haven't got your microphones on mute, that'd be great if you could pop them on mute, and then we can crack on. But thanks for that, Jimmy. So let's look at the who we are and what we do. So bit of background. I'm one of the founding partners of Hoxton Capital. Chris, Matt, and myself set the business up in 2018. And basically we had three staff or 4 staff at the time. We now have over 330 staff spread across those jurisdictions you can see in paragraph 3. Hong Kong, our newest branch, which Jimmy joined us from at the end of last year, and has brought that on very nicely into this year as well. We have our office where I'm based in London. We have Abu Dhabi, so we have a Dubai base, Sydney, and also a North American hub as well. We roughly manage currently 1.3 billion US dollars under advice and management. And we service 3,000 clients from those jurisdictions which I mentioned. I think you probably guessed what my role is in all of this. So on the management side, we have this, and obviously I've been brought in and to look at, and we sort of devise the role to help clients invest into the UK property arena. So effectively, to go alongside investment vehicles for retirement, property is a mainstay, and the UK market has proved over time and time again that it is an extremely robust and strong market, and is going from strength to strength. Remember, in the UK, we only have a finite amount of land in which one can build on. It isn't like the vast wastelands of America or Canada or Russia where you can build and build and build. Effectively, there's only so little room, and we have such a shortfall and demand for properties in the UK. We need to build, I think, an average 400,000. We're in deficit at the moment to build every year to keep up with demand. So we don't see property prices stagnating anytime soon, and I think they will always incrementally go up. But that is a little bit of background on the company. As our mission statement, we're a full end-to-end service for those who have dealt with us, who have joined us and dealt with us in the past, or those who are new to investing, or have spoken with Jimmy on this as well. We offer the full service, so a full turnkey solution in which we will find you a unit, we will look after it for you, manage it, and if need be, in some instances, get lending for you as well. I know today's webinar is based around the social housing element or a fixed income element, but we do offer that as well. So our main service caters for looking at completed units, not off plan, good returns. We do that from your vanilla style of investment all the way to a social housing style of investment as well. So yeah, just that's a bit about the company. I'm going to hand over to Jimmy, who's going to take you through the next few slides to go through what an HMO is and the benefits. So over to you there, Jimmy, so you can have a go through.
Great. Thanks, James. Obviously, we do brand new stuff and not off plan, but we do existing stocks. Some of the stuff we do is a HMO, but it's a special type of HMO. Before I go into this special type of HMO, let's talk about what is an HMO and why do we do it. So let's look at this this house, for example. If it was a single let, you basically let to one person, one family, one lease, and you only have to do with one tenant. But if it's let to as an HMO, house with multiple occupancy, that means it's got many people living in the house, that people they don't really know, and they share the facility of the house. For example, this house, if you have 3 bedroom upstairs and a lounge, we can turn this into a living space. And we have to be compliant. We have to spend money making it fire safe, fire doors, fire alarms, everything. So there's more money you have to spend on making an HMO. The good thing about that is you spend the money and you can rent the room out individually. For this example, you can spend you can have 4 rooms, so you have almost double your income. So instead of getting a £1,000 for a single let, for this one you probably get close to £2,000. So you double your income, which is a great thing. But that is not the whole story. Even though you double your income, you also double your headaches and you probably triple your expenses. It's like having a wife, triple my expenses anyway. Why? Because the headache is, well, instead of manage one person, you manage 4 people. And sometimes you get strangers coming in. Sometimes you get people come back late. Now they turn on the TV, turn on the radio, and they disturb other people. It's very hard to manage. It's not easy. So that's one thing. And why does it triple your expenses? Because the cost of maintenance is higher. For example, for HMO, you have to pay for all the bills. I mean, for buy-to-let, the tenant pay for all the bills. For HMO, you have to pay for all the bills. You pay for the gas, the electricity, the internet, even watching TV, which a lot of Hong Kong people don't know. There's TV license, and there's council tax, etc., etc. So you have to pay for all that. So you don't exactly get the £2,000. So you have to pay that off as expenses. So yeah, so it's good that it increases in HMO increases your income, but there's also a little bit more headaches and a little bit more expenses. So next slide. Next slide, please.
Yeah, you should come up.
Oh, okay.
You have it?
Nope, I can't see it. Still on the what is HMO.
Okay, just give it 2 seconds, Jimmy. It's loaded on mine.
Yeah, I mean, I remember one of my HMOs had 5 bedrooms, and then the toilet was smashed up. And when we asked who did it, and everybody saying, "Hey, not me, not me," and these are the expenses that it occurs without you having to plan that. So managing HMO is higher, and the cost is higher. So the benefit of HMO obviously is higher return. I say you probably double your HMO, double your normally buy-to-let of a standard buy-to-let, and there's growth over time, and it's low, and it's not actually low or no management costs. The management cost is actually more than standard buy-to-let. It normally is about 15% plus VAT, or sometimes I've seen them 20% plus VAT. And there's rental voids. There's less rental void probably compared to traditional buy-to-let, because if one person goes out in traditional buy-to-let, your house is empty. For HMO, if one person goes out, you still got 3 or 4 people staying in the house, so you still get income. And that's always is completely hands-off, just like buy-to-let or HMO. Next slide. Okay. It's coming up. Technically, it's coming up.
You have it now, Jimmy?
Okay. No, I don't. I don't see it yet.
Okay.
Yeah. So, yep, I've got it now. So
Perfect.
why do we do social housing? Well, the point of social housing and HMO is very related. We will talk about that in a minute. But social housing have many types. I think that fundamentally, social housing is good, especially for investors, is because the government backs it up. The central government or the local council, they pays the bill. We normally a charity or some kind of a large company that represent the government. They will take care of everything. So we have a rent assurance of maybe 5 years or 7 years, or sometimes it's a longer option. So they assure you with the rent. So it's never ever heard of that. No, it's a default on a social housing. It's never heard of. And there's no bills. I mean, you get advantage of HMO, but there's advantage of no bills, just like a buy to let, as traditional buy to lets. There's no gas bill, no electricity bill. I don't know if you know, but the gas bill and electricity bill in UK has gone up the roof, gone through the roof. I mean, it's double and double. I was speaking to a HMO operator this week. I mean, she's saying that she's thinking of quitting because the HMO bills is getting so much. So there's no bills for social housing. There's no council tax bills, and there's no maintenance. That's a big one. You know, if the toilet gets smashed, if the toilet gets blocked, if there's a leaking tap or anything like that, normally as an HMO operator, you have to deal with that. You know, you have to pay money to someone to fix it, to go and look at it. But for social housing, this is all taken care of. It's all part of the cost. And then there are the long lease option, which is the most attractive, at least for me anyway. So you have a contract in place, which is 5 years, 3 years, 7 years. I think on average it's about 5 years, which is pretty good. And it's already tenanted. The lease is already in place once you buy it, and you will get pay on day one, which is pretty good. So I think next slide, please. So let's summarize. So why do we do social housing HMO? So compared to traditional buy-to-let HMO, the price, of course, will be higher. Traditional buy-to-let, it probably will be less. An HMO will be higher because, as I said, there's compliance you have to do. You know, you have to fit fire doors, fire alarms. I remember 20 years ago when I was doing HMO, I could just buy a fire alarm in Argos and stick it in the kitchen. You can't do that anymore. Everything has to be interlinked. Fire alarm, that costs money. That costs over £2,000 just to put that in. There's fire doors and everything has to be compliant. So it costs more to do an HMO. The same for social housing HMO. They cost more to do. The running costs. Running costs of a traditional buy-to-let, it could be relatively low, depends on what type of client you have, depends on if there's maintenance to do. But definitely HMO, traditional HMO, the running cost is definitely higher. I mean, imagine getting your toilet smashed twice. Imagine you have to clean up. You know, you have to have a cleaner for HMO. You never need a cleaner for traditional buy-to-let. You know, if you don't have a cleaner for HMO, all the kitchen or the share areas, they get dirty and filthy. The tenants don't go clean up, so you have to spend money on doing that. For social housing HMO, the running cost is, you know, is very, very little because the organization who take care of it will take care of all the maintenance and all the issues. So it's none of my business. So, okay, the length of lease, a traditional buy-to-let is 1 year. You know, sometimes you get 2 years, but traditional is about 1 year. An average HMO in UK is about 9 months. That's how long people stay in HMO. And for social housing, we get leases for 3 years, 5 years, 10 years, 7 years. So that is completely different. I mean, imagine all this money you can save, just getting voice, not saving the voice, and I don't have to find clients moving in again, the tenants moving in again. And then you have the risk of doing this. Relatively buy-to-let traditional is relatively low risk. You know, there's nothing really much goes wrong. I had a tenant who stayed with me for 7 years, had no issue at all. That was brilliant. It's relatively low risk. But HMO could be very different. Traditional HMO, anything can happen. There's risks that you cannot predict. Things can go wrong, like toilet can get smashed. The client doesn't like each other. They have a fight and they move on. Things like that. Anything could happen. So the cost of the risk of doing traditional HMO is high. But doing a social housing HMO is great because you don't have to deal with any of those maintenance issues. You don't have to deal with any of the tenant issue. So basically, it's all hands off. And the net return, well, as I said before, HMO, you normally double your traditional buy-to-let. And for social housing, it's even better because there's no other extra costs you have to put for like the HMO. So basically, in a nutshell, social house HMO, you have a relatively lower risk, just like a buy-to-let, and you have a higher return than a traditional HMO, which is great for investor, lower risk, higher return. So
yeah, I think that was summarized well, Jimmy. That's pretty good. I think just to add on that social bit, just to sorry to cut in, but the last bit of the social housing is effectively when you're looking at using one of these properties with a guaranteed and fixed income, you are effectively buying yourself a salary, an annuity for a yearly for X amount of time, and this is good for retirement planning. Most of us now are, when we're looking into retire, the one thing that you don't have is income, a steady stream of income. So we have to rely on other sources, and this is one of those options in where I'm seeing personally a lot of my clients looking at, we're looking at reverting to this style of investing because it gives them a guaranteed amount of income, which is inflation proof for X amount of years, which is helping people in their finances in their later years as well.
Okay, we try not to use the word guarantee. We say assure income. Basically, they sign the lease for 5 years, 10 years. You can almost say you can forget it. The rent's going to come every single month on time. You don't need to worry about it at all.
Okay, thank Jimmy. Appreciate those slides. Very useful and very helpful. Guys, in this part, I'm going to talk you through about some of the product that we have currently with one of our partners, which is the National Housing Group. National Housing Group is run by a friend and a colleague of mine, Stephen Wasserman. We basically were looking at partnering with a successful company who are looking at building or the demand for affordable housing. As I mentioned earlier in the previous slides, the supply for the UK market for affordable housing and solutions for I'd say, let's say, assisted living or homelessness was quite large. So they've come into the fold 4 years ago now, and effectively have developed and grown so rapidly in that time. Stephen's background was in financing with West One. He sold that company and has now created NHG. Now we work exclusively with NHG. We also raise a lot of capital for some of the properties as well. So we have a varied amount of properties which come through our door, which we then package up, and we would relate it to clients like yourself who want to obviously purchase and get into this specific market. So basically, yeah, we look at working in and around the London area with these guys, mainly because the LHA rate, which is the local housing allowance, which is a lot higher in London, and the demand, it's a 9 million populous city, so it's heavily outranks the next city, which is Birmingham, with just over 1. So the demand for properties is quite high, especially on the lower income market. So effectively, what that does is allows us to have a product in which we can then tailor make for an investor like yourself, and give them an income based of a period between sort of anywhere between up to 3 and up to 20 years, depending on the product. They've developed in the last 12 to 100 units. They have 500 units that they've done themselves over the last 4 years. they're quite a large company now, over 1 million income on their rent roll, just from the projects they've finished. I'm going to show you the charities they work with in a second, so I'll go through them. The thousands and thousands of people that they have tenanted over those years, and the covenant strength. So the units that we have currently are actually covenant strength with NHG. So NHG will be guaranteeing that, giving the lease for that 5-year period. So there's a 5 and a 3-year break period from some of the units that I'm going to show you in a second. But yeah, they're obviously a well-established company now with huge I'd say influence in this market. So some of the companies they work with, so the Single Homes project, made in the 1970s, over 2,500 staff, £2 million business book. So a huge company. They obviously, you can find them online as well. The Social Interest Group, 600 workforce, over 1,000 properties in their network. Centrepoint, over 6,000 properties in their network and over 1,000 staff. And St Mungo's, who are their northern partner, again, huge balance book, over 1,000 staff. And well over 1,000 properties with them. So these are the kind of companies they would work with, and the kind of tenants that you'd expect to be in their properties. And sometimes the properties would be directly with this provider, and sometimes it will be with NHG with a provider in tow, or with their own tenants. But these are just something to give you some clarity or some idea of who they would work with. Going to give you an example now. I have one of these myself. We had a few of these this year, and they're very popular. 7.25% income. It's a London-based property. 5 years with a 3-year break. There's an option to extend that period. I think just to give you examples of what we're looking at. So quite big flats. I think this was a 2-bedroom apartment split into three rooms, as Jimmy kindly showed you in that breakdown of the property. Splitting those up into rooms as a standard HMO is is extremely appealing from a rent perspective. Sometimes it can be a little bit tricky managing individual ASTs or contracts with those people, but in this case, this all taken care for you. So this HMO, 3-bedroom social housing, all with clients in situ, all tenanted currently, returning a 31,500 income bracket there at the moment. So this is one example. Sale price up for 435. I have one myself. Extremely pleased with it. I've been had that for the best part of 8 months now. So another example of something that you would be looking at with an NHG contract ready to go in zone 4 of London, so Wembley. So a place called Alperton, so very close to Wembley Central. Wembley itself has had, and some of you may have been there recently, huge regeneration. I think over £1.5 billion project in the centre alone, along with the train station, growing up to 4.5 billion over the next 5 years. So they've had quite a lot of in Brent area, sorry. So quite a lot of expansion and investment, which has obviously made it quite prominent over that time as well.
Yeah, James, I don't know if you know, there's the Berkeley, they're building a 3,000 unit place right next to this place.
Yes, so they're actually in process at the moment. So if you can see on the street view, they're actually building that. So property prices will soar on the back of that, as you know. So yeah, thanks for reminding me that, Jimmy. But that's going to be fantastic for the area. Berkeley Homes are a huge name. So bringing up that area and bringing up that value is gonna be something that's going to be in our forefront of thinking over this time for sure. So yeah, definitely. This is
7.25 net in London. Zone 4 is almost unheard of. Oh, that's amazing.
Yeah. So effectively, these pricings, you're looking at what typical buy to let, as Jimmy mentioned before, the single lets, you're probably going to be getting between 3 and 4 in London, maybe less after. So something like this proves a really good investment, and sub £500,000 as well. So yeah, one of the examples that we have at the moment with an NHG lease on it for 5 years. The next example is a South London property. Apologies for the grainy picture on the top right there. I want to take some time to look at the finish as well. So it was the same as the Wembley one, all fully refurbished, ready to go. You can see the small kitchenette there. Everything is like this at the moment. These have tenants in. These are brand new. This was finished at the end of last year. We've just split the title, so you can purchase the freehold but purchase both flats. But we have 2 apartments here. So it was two 1-bedroom apartments, so large 1-bedroom apartments split into 2 rooms. So they're now 2 2-bedroom HMO units. This is in southeast London, near Greenwich, place called Plumstead. Agreement to lease again, NHG for 5 years, 17,888 income, good net price of 298. Again, nice Victorian house, road is nice, affluent area, so nice character building. So yeah, with both of these, top and bottom, are available. And yeah, the finish, again, like I said, I've been to this. I saw the refurb in action. So top finishings, and yeah, they're built to last. So currently yielding 6.1% in that area, and they are fully rented at this moment in time. Even though they already are rented, the lease will be assigned to you as a brand new 5-year lease as well. It won't be as a term that they already have. It will just be assigned to you as new also. So that's some of the examples of that we have currently. And just to give you a flavour, so we're always looking at adding additional properties to the mix. We have obviously a few more examples, but just to give you an examples of some live, ready to go HMOs, I thought I would share these 2 with you on the presentation.
I just want to say the new Elizabeth line, across Woolwich, is going to be 10 minutes away. And when that happens, it'll be amazing. I mean, going to central London will only take 20 minutes.
Yeah, so that line being built for quite some time goes all the way across, all the way across London, all the way to Slough, all the way to Essex. Fantastic opportunity, and really bringing up that part of London, connecting it to the city, which is great. So, Jimmy, do you want to run through the quick summary at the end?
Okay.
Would you like me to go through it? So it would be great if you could run through that, and then we'll take some questions.
Great. Well, we all know HMO offers you a higher return than the traditional buy-to-let. That's why we do it. Higher rent, a higher income. But there's also risks in HMO. The management could be risky. The maintenance could be high. But we have the benefit of a traditional buy-to-let and HMO by doing social housing HMO. The rent is assured. You don't have to think about default. There's no need to think about it. They're going to pay on time. There's no expenses like the council tax, the maintenance costs, TV license, whatever, internet. There's no extra costs. And there's already tenants in place, so you can have rent coming in on day 1. And they give you a fixed long lease, 5 years, 7 years. So that's pretty good for an investor. You don't have to worry about much. There's no nasty surprise at all. So it's totally hands-off. One company will look after everything for you, so you don't have to speak to all different tenants. So that's the great thing about social housing.